Good afternoon, ladies and gentlemen, and welcome to this afternoon's Markets Now CPI live trading event. Hope you're all doing well out there at the moment. Looking forward to this afternoon's session where we hope we're going to see some action-packed market volatility. And yeah, hopefully get off a couple of profitable trades. That's what I'd like to see. Good afternoon to you, Coratim. I see we've got a few more in the house as well. Hey there, Ryan. Good to see you, buddy. H&C, hello there. And good afternoon to you, Kai, as well. Good to see you. So I imagine we'll have a few more people dropping into the room. We've got a few people out there on YouTube as well. So good afternoon to you on the other side of the trading community right now. Good to see you as well. So let's see what we've got. Let's see what we got going on for this afternoon's CPI expectations. We'll start off with the data as we usually do. We'll crunch the numbers. And then we'll start looking at getting our trading assets ready and prepared for the afternoon's action. We're currently at 4 minutes past 1, so we've got plenty of time. Let's check it out. So this afternoon, 26 minutes time, we have on top of the ADP employment change, we have CPI monthly and annual, and then we've got the real important ones. We've got the core CPI monthly and annual data as well. We have a 2.6% previous figure on the annual core CPI number. The consensus is a 2.7, so a 0.1% increase over the previous figure. Core CPI monthly is looking at a 0.1% increase over the previous figure to 0.3% as well. And then we've got base inflation at 2.7, so remaining stable over and above the previous 2.7% figure. And then finally, for the base inflation monthly figure, we are also looking at stability with 0.3 over a previous 0.3. So we've got stability / increase in inflation. Now, obviously, with the Fed in the state they've been in the US in particular as well, we have been on the never-ending fight back down to our 2% inflationary target. We're still fair ways above that at the moment at 2.7%, and the figures are looking like they are going to be increasing today over and above remaining the same. So I don't necessarily think it's going to be a beat on the numbers. I think to see a beat on the numbers today would be quite the shock. I really do. And I think the volatility that would come as a result of that into our US indices, for example, would be pretty earth-shattering. The type of moves that we'd be looking at. Definitely not stuff that us as mere and humble retail traders would manage to jump in on. And that is simply because of the execution speeds that we're dealing with. We just don't have the power to be able to get a decent fill on a surprise like that. We can certainly mitigate some of that risk in certain ways, and we'll walk you guys through those over the coming 20-minute time. But for the most part, we would have to sit back and then wait to trade the correctives thereafter. If we get the figures coming out as expected, I think there's still going to be some decent volatility, because at the end of the day, if we are, even though there might not be much of a surprise, if the data confirms what investors believe to be true, i.e. that inflation is not coming down, it's actually ticking up on the figures, then that's still going to be pretty detrimental to the riskier assets, less detrimental to the US dollar, which we might see a little bit of a bid in, but things like equities may decline slightly. The US 30 Dow Jones may decline. US tech stocks, historically a little bit more resilient to increases in inflation, may be okay. We may see a bit of a bid out of them. But ultimately, yeah, I think it's going to be pretty detrimental across the board with riskier assets, and maybe perhaps a bit more bullish with our currencies. You may see gold actually get a bit of a battering if the CPI comes out strong. Yeah, not necessarily weak. On the flip side, that's a good segue into if we get a miss in the figures. So let's say, for example, our core CPI annual figure at the moment is at 2.7 over 2.6%. Well, if we actually get a figure at 2.6 or 2.5, a 0.1% decline, then I expect the US indices to really rally as a result of that. The US dollar would probably sink and we may get a pretty nice explosive 60 to 100 pip move north in gold, which would be great. We haven't actually got any multi-asset class trades on the board this week, and this is the first week where we're kind of reintroducing the rest of the trading assets, although that will go by the wayside today because of the CPI event, of course. But we will be looking to introduce all of those back, and today is that kind of first major day where we're going to be starting trading the multiple asset classes. Back to the data though, if we get a miss in the base inflation rate, let's say consensus at the moment is 2.7%, which is the same as last time, but if it's actually coming in at 2.6%, that's going to be pretty bearish in the US dollar as well, although it is the Fed's, it is the Fed's mission, that's what they're aiming for. We may get a nice rise in the US indices as well. And then finally, what we have seen in recent history at least is a mix in the data. And we saw this with NFP just on Friday. Yes, we didn't really get much of a surprise event out of that one anyway. But what little surprises we did get out of the employment data between average hourly earnings and then the NFP and then the unemployment change was the fact that one was bullish and one was bearish. So any potential volatility or trading volume that we had in one way got cancelled out by the other piece of data. That does happen quite frequently nowadays. We don't generally see just a big wall of green or a big wall of red, which is back in the day used to really cause some nice moves. So we may well be we may well should have a little bit of an expectation that could possibly happen as well, and it may cancel out each other's moves. I am expecting a bigger move today from the CPI than we did last Friday for the non-farm payroll. As I mentioned at the beginning of the NFP session that you all would have seen, the CPI events, generally speaking, over the course of the last 2 years have been more prominent and better money-making opportunities than the non-farm payroll events on a regular basis, on a consistent basis. So I do expect that theme to continue. So that's pretty much it there for the numbers. We do, of course, have a little bit more data out later on this afternoon at 3 p.m. We've got new home sales and new home sales for the month of September. We're not really looking at too much of a change in data there either. And that's not going to drive the NAS 100 or S&P, possibly the US 30 Dow Jones ever so slightly. But really today is absolutely about the CPI itself. If you've got any questions, guys, or anything at all, please feel free to ask on the way through, and I will get back to you as and when possible. So what we're going to do then is we're going to start from the top, work our way through, starting from the US indices. We'll work our way down into precious metals and then into the Forex markets, where we will today be looking at the Euro USD, cable, and the USD versus the Japanese yen. I'm going to give the CAD a miss today. Really looking for, as I say, the EU, the GU, and the UJ. So first of all, US 30 Dow Jones. Let's check it out where we're trading at the moment. Currently trading down at 49,487. We've got, let's check out our trading margins here for a moment. We should be expecting some relatively big moves. I don't want to get too optimistic though. Got to take into account the slippage. We are trading up at liquidity at the moment, so it would make really good sense to see a move back down into the lows here, possibly going for a slightly more intraday themed trade with the anticipation of the move being big enough to get in and out of it quite quickly. We've got this low, which we could certainly use as a breaker structure point for our entry. I love the target profit. This is where we were trading away from yesterday with success as well. We got a beautiful trade-off yesterday in the US Open as a result of these areas. And I would like to think that we could have our stop loss possibly at around here for a 1 to 3.85, which is a fantastic trade. Now, bear in mind that we will probably be removing almost one off of the risk reward due to slippage. And so therefore that 1 to 3.85 is probably going to be around a 1 to 2.85. But that's still really, really healthy. I love that. So I'll be looking for something like that for the short. For the long in the Dow Jones, for the long, I mean, it's a difficult one because we're trading against liquidity. That's the only problem. So let's move on, see if we've got any other long margin of availability. Okay, we actually don't in the NAS 100 either. We don't have much of anything in the NAS 100 right now, so that's a little bit of a shame. Let's have a look at the S&P. Yeah, S&P certainly not quite as bad as the NAS, We've got a really nice use of the ascending point here, which we can utilize. And we've also got a descending level coming down here, which is also quite nice. We can use both of these levels as breakout margins. Say, for example, we get this area in here. That's going to propose a beautiful margin up to there. So we're going to look at approximately, I want a 3.5, let's say, for the long in the S&P, which is really, really nice. And to be honest with you, I mean, we're going to have a relatively decent, actually, yeah, we may do. So say, for example, we want to get the breakout here. We'll be trading below the ascending level, below this point of liquidity. We'll have a TRF there, but I don't think that's going to mean anything when it comes time to go. We could potentially look at the short, ideally down to the median, but I'm probably going to, yeah, I'm going to stick to the median actually. Yeah, and that's going to be a 1 to 3.73. So a couple of really healthy trades there in the S&P 500. Nothing at all in the NAS 100, unfortunately, today due to the trading margins. And also, we're only looking for a short in the Dow Jones. So we're going to download that one, and we're going to download that one. Okay, next up, metals. So gold last week was very, very disappointing with regards to the non-farm payroll event, as was most trading assets, frankly. I think it'd be worth having a look at this on the anchor chart. We've got nice big point of liquidity down there. We did make some progress to the downside, but ultimately failed. Currently trading here at the moment. We've got the possibility of a breaker structure point down below there, but then it's a very short journey back down to 45.54. Let's just thin that out a little bit. Ultimately, this is where we want to be breaking. And then we've got the margin down to the lows, and we'll be trading from here. Yeah, this is quite difficult as well, really, just in terms of availability. So we're trading on top of this level at the moment. We could certainly use this as a breaker structure point. Breaker structure underneath here. Remember, these are not pre-market trades, so if the market's trading below these entry points, you're going to have to realign yourself with where the market's trading, which we will do in real time. But you'll have to be quick and you'll have to be prepared for it. I want 2.57 between A and B is really nice. The backup trade idea, if the market starts shooting down before the CPI event in about 15 minutes time, we'll be looking at the secondary, which is down here, down to liquidity. And you will have a good risk reward ratio on that one as well. You're looking at around a 3 to 1. So that's not bad. If you want to be taking a long in gold, then we've currently got the breaker structure formed for it. We're incredibly close. Arguably looking at that level there as the breaker structure. So then the long is going to be taking place above here. Targeting up at the highs there at 46.27. And the stop loss at the 50% point between A and B, which is yielding a 1 to 2.97 on the risk reward scale. So that again is also not too bad. We are going to have to, there's no way to soften the blow on this one. We will have to be really hands-on and ready to rock and roll with gold today. The margins aren't crystal clear. There are high risk areas all the way through it at the moment. So we're going to have to be really, really hands-on with our approach and that stuff at the moment. So it is what it is, though. Next up, we're going to work our way down to the EU. Start up on the 15-minute anchor chart, get a view of things. Okay, straight away, I can see a pretty healthy margin. We've got the low down here, which is nice. We've also got the breaker structure point, which the market's trading against currently. That's about there. Trading margin between A and B. So we want to be careful. Obviously, the market could break down below prior to the CPI event taking place. Target profit down at the lows there. Stop loss is going to be a nice margin above the high. That's going to be a 1 to 3.2. Really, really nice looking trade idea. We've also got the high of the inflection point, which is here, which is the beginning of the major sort of price action pullback, if you like. This is where the commercial institutions are coming in and changing hands of the money. And the point in which we should look for an entry on this one is not ideal either. It's nothing's looking perfect today. Nothing's looking perfect. We've got several areas where the entry could work, but none of them are without their flaws. So, for example, like this area looks good for some things, looks bad for others, but then the next one up looks good for some things and bad for others. And remember, this is a 15-minute time frame as well, so the margin here is quite wide. It may be worthwhile, just from an intraday perspective, and take a little bit of pressure off us if we did actually look to either trade between these two margins and break the big one down in half, or not even look to trade it until we get past 116.75. So let's have a look at the 1 minute time frame first, because that is a respectable trading margin. Absolutely, it is. So I'm thinking to myself here, maybe, I mean, just from initial glances, we've already got a relatively strong point in which we could use for a break of structure. Even better is there. So I'm thinking, let's go for the 1 minute trade from there up to the high. Stop loss down here, you're looking at a 1 to 3 or a 1 to 3.1 on that one as well. So that's not too bad, is it? You know, that's looking pretty decent. The short is monumental in size in comparison to the long, but still they both have their benefits, I would say. You know, we're not going to be we potentially would be able to be in and out of the market very, very hastily with the long, which means we know we don't have that market exposure, which is good, which is a good thing. Whereas the short, we're probably going to be, you know, thrown around in it for a little while here. We'll have to reevaluate our entries potentially, but I'll be flicking between the assets as we go on. We've only got 10 minutes to go before the event. And let's download that one. Moving on then. Next up, we've got cable. Okay, so pound against the dollar at the moment. Let's check out the anchor. 50-minute time frame. Similar to the Euro USD. To be fair, we've got a nice break of structure point in here. Nice floor of the market, which is down there. Beautiful trading margins. They work out really well. They have done once, twice, 3 times, 4 times. You've only had one loser as well, so it's a 1 to 4 in terms of the risk reward ratio in terms of winning and losses, which is quite nice. Potential TRF. Actually, what I'm going to do, just on reflection of this major move that we had to the upside, I'm actually going to bring the floor up. What's that going to do? That is ultimately going to limit again the market exposure. If I can get us in and out of trades quickly, as quick as possible, that's a good thing. So then we'll be looking at short and cable. That's going to be there. Targeting down here at 134.20. I'm going to bring that stop loss up to about there for a 1 to 3.1. Remember, guys, lots and lots of really nice risk reward ratios that we're looking at here today. Probably going to come away with something that looks quite different. Not saying they're going to be bad by any stretch of the imagination, but all of these 1 to 3s and 1 to 3.3s and whatever are probably going to drop down by 0.4 to 0.5. It's still going to be very positive, but it's not going to be as positive as we're looking at here as a result of wild variations in the spread and poor fills. Just so you're absolutely aware, because things like that usually go amiss, I've found over the years. So what we're going to do is look for a rejection from this low and a trade back long to the previous high. Again, this is going to be a quick in and out trade. In an ideal situation, we're going to have our stop loss at about there for a 1 to 3. Market's already down where it should be at the moment, so there's nothing holding us back. The only thing holding us back from taking a long here is, of course, the time. We've got 8 minutes to go. So we've got cable in play. Let's go down, work out on the USD yen. So USD yen at the moment, nice big bullish move. I'm actually going to go up to the daily time frame here just to consolidate the data even more, get that clearer view. So we cannot ignore the fact that we're trading up against a massive daily point in liquidity in here, guys. You know, it doesn't take a rocket scientist or a market master to be able to tell that there was something major that happened here. in January of last year, just a year ago. Huge sell-off. And we've come all the way throughout 2025, working our way back up to this level at the same time it was last year that we got the collapse. Now, by no stretch of the imagination are we going to see the same thing again, but make no mistake, there will be commercial interest and protection at around 158, 159. There will be, guaranteed. So, how do we navigate this one? Unfortunately, for the long, it's not going to work out for us. I don't want to be taking longs through this point of liquidity in there. It's gambling. What I am happy doing is taking a rejection trade. Where am I going to look at to take that? The next major point of liquidity down. High number 1, high number 2. We've also had inflection here as well, where the market's broken above and it's come back down to retest. This means there's magic happening here. There's cash. So if we go back down to the 15-minute time frame, just double check the margins. They're looking really good, not bad. We go back down again to the 1-minute time frame and we see that that is actually a really nice space to trade. All we need to do now is to iron out the entry point, which is going to be at the beginning of a price action pullback in recent history. We've already got that. Fantastic. That's this little point in here before we get the move down. We're going to be targeting down at the floor. And so the trade idea naturally works itself out. Target profit down at the lows. Entry. Stop loss, a nice margin above the zone there. And we're yielding a 1 to 2.93. And that's going to be the UJ trade. Now, the only other issue we have with this UJ, of course, is the fact that the market's trading quite, sort of quite high above the 158.40 area. So it's going to have that big volatility strike to the downside. We may be in a spot of trouble down here, but it's fine. We're not looking to win every single trade today. We're looking just to simply make more money than we lose. Now, that's a great segue onto the next point that we haven't discussed today, risk management. We've got 5 minutes to go, by the way, so I'm going to be ducking away to get my numbers punched into the broker in a minute. But risk sizing today is to be no more than 0.15% per trade. Okay, if you do not have the financial capacity to make that work because your account sizes are too small, that's absolutely fine. You've got no reason to be shy or or whatever about it. You just focus on a simulated environment and you don't put anything at risk. This, as much as it is for some of us to utilize as a trading opportunity, as a money-making opportunity, it is also very much for the educational opportunity. As you'll notice with these sessions that I carry out, we're not doing a 30 chart spam of just going through and just shouting numbers. This is about process. It's about how I fine-tune my charts from the anchor charts working down to the time frames to really iron out the process of each individual opportunity. And also, if there isn't one, such as a long in the USD yen or such as the NAS 100, where there wasn't an opportunity on either side of the market, it's as much to know when not to trade as when to trade. So please take the take the opportunities for that as well and see that as a benefit over and above just simply making some cash. So 0.15% being the absolute maximum for risk. Now we've got a lot of numbers to punch in. I can't remember what the last trading opportunity I actually took a picture of was. So I'm just going to go and download the UJ and the GU because I believe I already got the Euro USD. And yeah, and we'll get to it. All right, firing these in now, guys. Cable, UJ, EU, Gold, S&P, US 30 Dow. There you go. Right, I'm going to go quiet here for a moment. Just give me a minute and I'll be right back. We've got about 4 minutes to go. Just a heads up, the Dow Jones I'm going to carry out as a market order and not a pending or limit order. Okay, just to reiterate that, it is a market order, which means I'm pulling the trigger manually, not a limit or a pending order. Okay, we are ready to go. We've got about 15 seconds. 2, 1. Okay, we have a 2.7% annual CPI figure, which is in line with consensus. As expected data so far, ADP employment change was as expected as well. 0.2 we got a miss on the analyst expectations for core CPI monthly. And that's actually 0.2, which is the same as the previous figure. So stability, 0.1% down from consensus. So in terms of the surprise element, that will be considered a miss on the expectation, which is bearish the US dollar, bullish the stock market. And we have a 0.3 figure on the CPI monthly data, the base CPI, which means it's in line with the previous figure as well. So we have stability overall. Big bullish breakouts to be expected, although you can already see that on our US stocks. S&P 500 is cleared. However, I have suffered some slippage on that one. I will tell you exactly what it was in a moment. I can't work out the math in my head. But it's good. We got a nice result on the S&P 500. I'm happy with that. It was a good move. So that's that one. Let's check out gold here for a moment. It's not great. Not really seeing too much of anything with gold. Same as the US dollar at the moment, as you will see over here. We go down the 50-minute time frame. We've had a bit of a surge. Not too much to shout home about. Not really much going on there. As a result of that, we're going to see things in the Euro USD. Euro USD, really nice, big, beautiful move in there. I've already been able to tell I got suffered by slippage as well on that one. My fill was up at around 116.58. So, sorry, 58. 68. 1660. Yeah. Okay, yeah. I got absolutely nailed on that one. Jesus. That was probably like a 0 to 0, 0 to 1, 0.3 to 1 or something. Yeah, that was nasty. So that's a shame. My Euro USD was blown out. My cable trade on the long was actually not. That was a 134.64. So yeah, 134.64. 64.9. Jesus, that was basically, yeah, it's 49. That was literally like a 0.01 above where I got it. Okay, I will take that. Cable's fantastic. So really happy with that one. My Euro USD was completely blown out. Cable was locked in really nice and tight. So I'm really happy about the fill on that one. USD yen, we didn't even take a long. It's gone short anyway, but nowhere near our entry point. So all in all, we are very nicely up on the day for this session, which is great. Shame I didn't get the US 30 Dow Jones opportunity, to be honest. We've smashed through liquidity. Looks like it could potentially continue here on after in the US Open this afternoon, which may be nice for you guys who aren't necessarily trading the news, but you want to trade the US Open. NAS 100 absolutely exploded through liquidity as well, so we now have a bullish path of least resistance for this one. And the S&P is the S&P. So yeah, all in all, not bad. Not bad at all, really. Not bad at all. That was a really nice day. So CPI data, just from an economical point of view, is very stable. Slight miss in the analysts' expectations is certainly given way to bullish sentiment for the stocks. A little bit of a breather, a little bit of a, thank God inflation possibly is coming down still, and we are still in line to reach those 2% targets eventually. I think it's going to be relatively short-lived. I believe that this afternoon, during the US Open, you guys are probably going to be able to have a little bit of a field day with trading the corrections. I don't actually, on reflection, I may have said a moment ago about bullish continuations. Bullish continuation for now, but leading into the US Open this afternoon, I do expect the markets to come back down and for you at the end of the day to see quite a large reversal. So I'm not saying that the market's going to be reaching lows that were lower than the point in which we started today, but I would expect the market to be coming back down, essentially handing away most of the daily gains that we've seen today. In another shape or form, we may see a bullish continuation this afternoon, maybe the markets rally, maybe 710's reached, maybe 720 in the S&P, but then overnight in the Asia session we start to topple, and then tomorrow morning throughout the European session we start to see the continuation all the way back down to around 69.86. This is also very, very possible, very likely. And I think that's going to be the same. I think that's going to be the same for all the US indices as well. The NAS 100 is going to be a difficult one to navigate, as well as the US 30 Dow Jones, because unfortunately with these guys, they have punched holes through big pockets of liquidity, and so therefore the path of least resistance is now bullish. That's a little bit of an issue for those of you who want to be trading the bearish setups this afternoon, because of course you don't have the POLR that you need. So you're going to have to navigate those ones as best you can. For me, I would not be. You won't see me proposing or suggesting trading opportunities ultimately that come as a result of that. So yeah, I'm only going to have a long bias. I have to be a slave to the rules. The rules work long term. They make a good amount of money. So I'm just going to be a slave to the rules. And if you've got pocket liquidity like that underneath price action, you're not trading through it. The only one where you do have the option of trading lower is the S&P 500. So my sort of post CPI release trading opportunity would take place below here. I would be looking for an entry at around 69.89, targeting down there where essentially we got into the trade last time, and that's going to be at 69.80. And your stop loss, nice little margin above there, maybe 69.92. That's going to yield you a 1 to 3 plus. And of course, you're not going to have to contend with the nasty slippage. I was closer to 69.84 on the entry for the S&P. Not quite. It was around, what was it? I'll fucking tell you exactly what it was. 83.82. So 83. Yeah, well, basically there. So that's where I got my fill. So we're not talking bad. That's not bad. Not in a news event like this by any stretch. That's not bad at all. But that 1 to 3.54, whatever it was just a moment ago, was actually more closer to a 1 to 6, a 1 to 1.6. Sorry. So it does eat into it. It does eat into it quite significantly. But look, it's a positive risk reward still. I'm still really happy with that. The S&P might be starting its bearish journey already. Let's check out the dollar index. Yeah, it's not doing anything, is it? Yeah, not doing anything on that one. Let's check out UJ. Complete reversal now, trading exactly right back to where we started. Okay, everyone can remove that, by the way. If they set up a pending or limit order on the UJ, please get rid of it. It's no longer valid. Cable's great. Really, really pleased with Cable. Not even sure what happened with my setup on that one today, but I'm not gonna bloody complain. But of course, I sacrificed the Euro USD to get it. I suppose it was one or the other. Bearish trade on the GU was really nice as well. I have no doubt in my mind that that's coming right the way back down to ground zero. Euro USD, my God. Yeah, a 0.24 to 1. That was my Euro USD trade idea, essentially. Absolutely terrible. Absolutely terrible, man. I don't know if I'm going to be able to top that one this year. That was it for the FX trades. Then of course we've got gold. So gold's not really doing much. I probably don't feel very confident about gold at this moment in time. The reason being is because of the dollar. The dollar's not doing anything. It's completely stationary. So we would need to see the dollar really start sinking down into 98.80, 98.70 territory, back into the cash-rich area down here, in order to see gold rally up to where we're targeting up there at 46.26. So I can't see gold doing that without the dollar's assistance. So it would probably be prudent to maybe take a little bit of risk off the table and bring your stops up to around 4606. That we can remove this now, by the way, guys. You don't need that one anymore. You can possibly bring your stop loss up to around 4606, remove a bit of profit off the table. You've already got next to a tiny margin in there anyway, right? We risked 0.15% all day long today for the S&P for the CPI. Sorry, you haven't got much on the line. What's the worst that's going to happen? It goes to shit, and then you've lost 0.15%. It really doesn't matter in the grand scheme of things. But if you are risk adverse, then feel free to bring your stop up. I'm going to let my trade run, just because that's why it's in there. I didn't have a gun to my head when I pulled the trigger on this one, but just looking at it from purely from an analytical sense, we've got the dollar which is rising at the moment. It's actually contracting in the singular 15-minute candle, which is not good news. This is only going to have one effect on gold, which is going to be forcing gold prices down. We're in a bullish trade at the moment. It's a long, as you can see, so it doesn't really make overall amount of sense. However, my trade's live. I'm going to let the thing go regardless and see what happens. Yeah, that S&P short's already triggered. Look, guys. I wouldn't really be looking to take any of these corrections for a little while. I'd be more favouring to wait and pause until this afternoon's US Open. I'll tell you what, if the US indices trade lower, back down to entries, and by 2:30 this afternoon, in less than an hour's time, I mean, you have my full go ahead to start buying into it again. I really do. NAS 100 and the US 30 Dow Jones don't look quite as tasty. Again, the problem is we're trading inside big points of liquidity here at the moment. That's the issue. Yeah, that's the issue with both of those. Let's go back up to the daily here for a moment. Yeah. Nah, there's just no way. There's just no way I want to be playing with this one today. It's too dangerous. Absolutely too dangerous. Same with the Dow Jones as well. You see points like this where there's been so much inversion going on around here at the moment. Lots and lots of indecision. We're coming up to this level. Someone, a multitude of someones, is protecting the bears. We're coming up here, we're attempting, we're failing, attempting, we're failing, attempting, potentially we're failing. So it's just not worth bidding before we get a clean break out of these points of liquidity. You want to be preserving your capital at all costs. So wait to see what takes place. This afternoon, if the market decides to take a dip, you've already got a really nice trade idea in the US 30 Dow Jones ready to go. That one there is still absolutely valid trade. It's not valid now, not valid for the CPI trading event, but like as I mentioned, in less than an hour's time, this might be a really good opportunity for everyone. Very nice trading margins on that one. I mean, a 1 to 3.85. And remember, you can increase the risk to 0.2 this afternoon as well. Or potentially 0.25. Yeah, take it up to full. So that could be good. That could be all right. Kai, natural gas. Yeah, sure thing, buddy. So Kai did bring this to our attention this morning as well. We've been waiting, as per the market analysis report and all the work that we have been doing ourselves on natural gas, waiting for it to see if it was going to come back to 3.7. The bloody thing did. It came up and it reached a high this morning of 3.696, which is basically 3.7. That's good enough for me. So we were looking at the retest and the continuation of this point. And even better, we've actually come back to liquidity first and then potentially going to see the retest, the break of structure through 360. So our intended view, I mean, really, it should be to break this ascending level first. And that would put us in the market. It depends how long we take. If we take a slow drop down there, we'll be in the market around 357. And then we'll be targeting 295. So, I mean, for all intents and purposes, we can look to take this one today. You don't need to play around with the risk or anything on this one because this is not a CPI related trade. Entry will be, about here possibly. The target profit down at the lows there at 295. And your stop loss for this one is going to be up there I would say approximately. That's a rough estimate. That's a rough sort of guideline as to around the trade that we'll be taking. Yeah. Something like that. If the market takes a good while to come down here, that's only going to be good for us because it does mean in actual fact that we're just going to be increasing that risk reward, which means we'll be able to get a little bit more flexibility with the stop loss. As you see here, my stop loss is getting higher and higher, but so is the risk reward ratio. So it is good to get in early whenever possible, but it is all down to when price wants to actually break through this ascending level. If it does it quickly and it plummets this afternoon, we're going to be in pretty bad shape because we'll be looking at a 1 to 2.59 for a long-term sell and hold, which isn't great. In an ideal situation, of course, it's going to be more up at around the 3.5 to 4. But it's close. I mean, we're really, really close. Really, really close on that one. It's worth people keeping it in their watch list now more than ever. Closing the daily gap, H&C says. Yeah. Yeah, it could well be. Are you talking about the ATMA there? Ah, good man. Good man. Yeah, cool. Yep, it could well be. Yeah, it's a great, I tell you what, it's a great technical indicator to show you commercial flow. It really is. Yeah, it really is. That is a little bit of market magic right there. Yeah, it's awesome. Eventually you won't even need it. But there's no problem at all in using it when you do. There really isn't. It's a great little tool. Well, ladies and gents, I'm probably going to wrap things up there then. Nothing more to report. The CPI is done and dusted. We didn't really have too much surprising figures, but like I mentioned, I did state it at the beginning of the session. Much, much, much better market volatility and trading volume than the non-farm payroll on Friday. So that was good to see. It is a little bit of a shame about the old slippage and taking a bit of a hit on the Euro USD and that ridiculous trade. My fantastic 0.24 to 1. But we did get a fantastic entry on cable. USD yen was knocked out. We got a really nice trade idea in the S&P 500. Gold, I don't know what gold's going to do. I'm letting mine go. I will obviously report to you guys of its outcome over the course of the day to see whether or not that one actually makes it up to 46.27 or if it's going to be counted as a loss. But all in all, team, we're up. So not bad at all. And yeah, I think that's about it. So are there any questions or anything else that I can help anyone with? Yeah, good stuff. Thanks, Coratim. Thanks for joining me today, buddy. And thanks to everyone else for joining me as well. It's been a good session, a little bit more fun, I would say, than the non-farm payroll. Stay tuned as well for tomorrow's public event. We'll be looking through the markets, and it will also be the first session of 2026 where we dig into every single asset class and build out the book across all three asset classes. The first one. So it'll be a real busy session tomorrow because we've got a lot of work to do. But listen, guys, it's been a pleasure as always. Thanks for joining me. It's been fun. Look forward to catching up with you throughout the day as well. And I look forward also to catching you in tomorrow's session. So I'll see you then. Take care, team. Catch up. Bye-bye.